this final accounts, if you see, you will be opening 3 accounts. Okay, one will be the trading account. Okay, then you'll have the profit and loss account. Lastly, it's called the balance sheet. In this chapter, without any adjustments, you have things called as adjustment. Okay, without taking that adjustment into consideration, they will just do a basic trading account, profit and loss account, and balance sheet. So this account is also, these accounts what you do is also like a ledger. So how many pages do you need to do a ledger? A double page, right? So likewise here also, trading, profit and loss, and balance sheet, you need 2 pages to do, a double page to do the sum. Okay, so first let's see what trading account is, and slowly we'll go off inside the other ones also. So trading account, if you see, basically it's a nominal account. Golden rule of nominal account: debit all expenses and losses, credit all incomes and gains. So all your expenses which is relating to a trading account will be debited. All the incomes which is going to relate to a trading account will be credited. Okay, so now you must know what are the trading account items, profit and loss account items. Profit and loss, not much to remember. It's only the trading account items which you have to remember. Okay, so when you start with the trading account, you should know these items and all. Okay, first what you have to know is an opening stock. Opening stock means stock which is there, the amount of goods which is there when you start a business. Okay, so from the previous year, whatever goods you have not sold, it will just be there remaining over there for the next year, right? So that will be called as opening stock. Next is our purchases. Whatever we purchase to complete the product or manufacture the product, raw materials, semi-finished products, all the purchases will come into purchases. With purchases, you will have purchase return. So if you have returned any goods because of defective quality, you will subtract it with the purchases. So when you subtract it, you will get net purchases. After these 2 basic items, we call this as basic items. 4 basic items we have, without which you cannot do the sum. Okay, only in rare cases, in special cases, you have with which you can do the sum, but basically these 4 items will be there in any sum you take. Okay, after this, the debit side, you will be recording the expenses, because this is a nominal account. So debit all expenses and losses, correct? So all the expenses you should know. So according to our trading account, we have 7 expenses which you should remember. Only the 7 expenses will come. Other than that, you will not have any other expenses in the 11th standard. Okay, so you should remember these 7 items name. First, if you see, is carriage inwards or freight inwards. Inwards only will come. Outwards will not come in a trading account except for return inwards and return outwards. Okay, when you do a purchase return, whatever you purchase, you are returning it. That means whatever you had is going out. Return outwards. So purchase return means return outwards. Sales return means return inwards. That is, whatever you sold, the customer to whom you sold is returning it back to you because it is not of good quality or damaged or whatever reason it may be. So it is coming in towards you. The goods are coming into you, into your business. So it will be return inwards. So other than these 2, any carriage outwards, freight outwards and all won't come here in a trading account. It will only be carriage inwards or freight inwards. So what is this carriage inwards and freight inwards is, you need to bring in your raw materials. For that, you need a transport to bring the raw materials from the place from where you purchased it to your factory. That transport will be called as carriage inwards or freight inwards. Okay, so the other name for carriage inwards is carriage on purchases. So in the sum, anything which has on purchases will come in the trading account. Okay, so that also you can keep as a link or a clue. Any expenses on purchases, if it comes, it will be trading account. Any expenses called on sales mean it will go to the profit and loss account. Okay, so let's concentrate here. Next is wages. Wages is the kind of salary what you pay for the people who load and unload stuff in your factory. Have you seen in the ration shops and all, when it comes they will carry those sacks of bags and they'll go in and they'll come out from the lorry to the ration shop. Have you seen those people? They are called as daily wage earners. They are not like your mother or father or like me or like you. Okay, their salary will be on a daily basis. Their work is just loading and unloading goods from the transport to the godown. That's all is their work. Okay, so the amount which you pay to those people are called wages. Right? That is also an expense which comes in the trading account. Next is dock charges. A dock means a place where a ship is stationed, or in the harbor you'll have a place where the ships come and anchor themselves. Parking. Okay, ships parking places, dock. So if your goods are coming through the ship, okay, it will be unloaded from the ship and it will be kept in the godown in the dock. So to bring your goods from the godown, you have to pay dock charges to the godown of that particular dock, and you must bring your goods out. So that charges what they have is called as dock charges. Okay, next what you have is octroi. Octroi is very simple, nothing but a toll gate, the money, right, to use that particular road. Okay, likewise, if you're a commercial vehicle and you're bringing in goods, mean to use that local road, you must pay octroi duty. It's also called octroi duty, or they will term it as octroi. Okay, so to just go from one limit, one area limit to another area limit to use their roadways, you have to pay octroi to bring in your goods. Next is import duty. So import duty, if you see, if you are going to buy any products from the foreign market, let it be raw materials or semi-finished or finished goods or whatever you are going to buy for your factory, then the tax which you pay in the airport to bring the goods is called import duty. Okay, then you have royalty. Royalty is a person who has invented a product, okay, will have a document stating that this produce or this product is been invented by me and I hold all the copyrights of the product. So if you are going to use it, you have to get the permission of the person who's got the copyrights. So you have to pay him. So that film industry we have, right? Theater, right? Okay, in the theater, the first screen they'll put one document and they'll show you, correct? That is a copyright. Okay, why do they show that? In the sense, this theater owner would have paid the particular producer of the film a particular sum of money to get the copyrights. That is nothing but the copy of that particular reel, the movie, to screen it in their theater. So that particular amount what you pay to the owner is called as royalty. Okay. Then we have is coal, gas, fuel and power. So if you are going to manufacture any of these four, you're going to manufacture coal or you're going to manufacture gas or fuel or power, the cost what you're going to incur, because if you're going to do that, you're a company or factory who's going to do that, then you have to pay the cost which is for producing these products will be an expense for you. So that expense will be debited again. Lastly, we have is cost of goods manufactured. So all of the top one which we saw, that is any expense for raw materials or coal, gas, fuel, factory rent, packaging, factory lighting, royalty, everything will come under this one heading called as cost of goods manufacture. The amount of money used by the particular person, the owner of the business, to manufacture a product. Okay, let it be a small pin to an aeroplane. What all they are using to manufacture the product, the amount of those products, the cost of those products will be included and be called as cost of goods manufactured. So now directly, maximum in all the sums, directly they'll give it as cost of goods manufactured. Only one sum you have where you have to work out the cost of goods manufactured. Okay, right. So that was all about the debit side. So first you'll have opening stock. Secondly, you'll have the purchases. If you have a purchase return, you will subtract it from the purchases. And after that, it's going to be these 7 expenses. So it's not that in all the sums, all the 7 expenses will be given. Okay, so you're going to choose, you're going to pick out the expenses and you're going to write. If you're very weak, okay, but you're very good at by-hearting these things, first, as soon as you get the sum, you know that it's going to be a trading account. First, start writing off all the basic items, that is opening stock, purchases on the debit, and then these 7 items, write it off. If you have that item in the problem, write the value of that item. If you don't have, simply put a 0 and carry on. Okay, it won't be a mistake. But if you're very weak in picking out things from the problem and writing it into the solution, the trading account, then you can go ahead of doing this. That is, blindly you can just first write off the format and then you can start doing the sum. So one by one, according to the format itself, you can do the sum. Right, so that was about the debit side. Credit side is the most easiest because only 2 items we got. One item, the first one will be sales and sales return. So when you sell goods, they'll give it to you as sales. So when you sell goods, that will come on the credit side. The amount will come on the credit side for trading account. If you have any return called as sales return, or what is the other name for sales return? It means return in goods. Then you will subtract it from sales and you'll put it on the credit side. Other than this, the other last item on the credit side is closing stock. Okay, only these 2 items will be there. Other than this, you won't get any item on the credit side. By mistake also, don't write anything on the credit side except for these 2. That is sales and closing stock. The whole debit side, you'll have 7 expenses plus the 2 items, opening stock and purchases. So that makes 9 items on the debit side, 2 items on the credit side. On the whole, it's a total of 11 items. That's all is a trading account. After that, whatever balance you're going to find. The ledger accounts, here also you'll see which is the greatest total and you'll put it in the grand total. The least side, in the ledger account, least side, what will you write? Least side will be a carry down. But here, it is just a little bit different. Why? Because if your least side falls on the debit, it will be called as a gross profit. Okay, the format on page 246. If your carried down falls on the debit side, you won't write to balance carried down. Instead of the term balance, you will use the term gross profit. Okay, if your carried down falls on the credit side, you will use the term by gross loss carried down.